Welcome to another episode of China Update, where I provide the latest analysis on China's political, economic, and geostrategic situation. I'm your host, Khan, and in today's episode, we'll be covering a number of important topics, starting with some unsettling news coming out of China regarding a new viral outbreak. I've held off discussing this for a few days because it's been difficult to get reliable information, and it's been hard to verify much of what's circulating. But after speaking to contacts on the ground, it's clear that there is something happening, though concrete details remain scarce. The official news is that China is dealing with a mysterious viral outbreak, and reports suggest it's overwhelming hospitals. There have been social media videos showing full hospital wards, long lines in pediatric units, and patients wearing masks. Some reports claim that crematoriums and funeral homes are struggling to keep up with increased demand, though these videos and stories are difficult to confirm. As someone who has lived in China for many years and has been in busy hospitals, I can tell you that the situation is often like this, particularly in large cities. This doesn't necessarily mean the videos are inaccurate, but we should keep in mind the context. Locally, there's speculation that the outbreak might be related to hMPV, a respiratory virus that typically causes mild, cold-like symptoms. The US Centers for Disease Control notes that hMPV can lead to upper and lower respiratory infections, and while it affects all age groups, the elderly and those with weakened immune systems are most vulnerable. China's Center for Disease Control and Prevention, CDC, has attributed the surge in cases largely to influenza, with 30% of tests returning positive for the flu, and 14% of hospitalized respiratory cases tied to it. This wave of infections mirrors a similar spike in the winter of 2022 to 2023, when COVID-19 lockdowns left much of the population with weakened immune systems, leading to a surge in pneumonia cases, which was referred to as the white lung phenomenon. Eyewitness reports from some regions, like a farmer in Henan province, suggest multiple deaths across all age groups, with funeral directors describing long lines and crematoriums working at full capacity. Still, the situation remains hard to verify, and the World Health Organization has not made any official statements on the outbreak at the time of recording. Many neighboring countries, like India, are monitoring the situation closely, and Hong Kong has reported a few cases of hMPV. Experts advise caution, noting that the flu and other respiratory infections can spread quickly in populations with reduced immunity. But again, there's a lot of speculation, and while we should remain vigilant, it's important to avoid jumping to conclusions based on unconfirmed reports. Moving on to China's economic landscape, there's news that the People's Bank of China, PBOC, is preparing to make a significant shift in its monetary policy, aligning it more closely with global practices like those of the US Federal Reserve and the European Central Bank. According to a statement made to the Financial Times, the BOC is considering cutting interest rates from the current level of 1.5% in 2025, although no exact timeline has been confirmed. This would mark a departure from China's traditional focus on quantitative loan growth targets. For decades, the BOC has directed bank lending toward key sectors like manufacturing, technology, and real estate, often contributing to bad debt and overcapacity in the economy. Moving forward, the BOC wants to shift toward market-oriented interest rate controls, with an emphasis on risk-based loan pricing and fostering sustainable, high-quality economic growth. However, this transition will not be without challenges. It remains to be seen whether China can manage this shift successfully, particularly with divergent views within leadership regarding economic policy. In a related economic update, China's currency, the yuan, has fallen past the key 7.3 per dollar level for the first time since late 2023, signaling potential further depreciation. This drop underscores the BOC's struggle to balance currency stability with the pressures of economic growth. Despite maintaining its daily reference rate, the yuan's weakening trend aligns with the rising strength of the US dollar and falling domestic bond yields. The weakening yuan could test levels not seen since 2007, raising concerns about market stability. However, the bot may use tools such as its daily fixing rate and direct market interventions to manage the decline. Despite this, the yuan's weakness makes Chinese exports more competitive but could hurt domestic demand if the trade surplus doesn't increase to offset the devaluation. Experts suggest that currency devaluation is a double-edged sword. While it boosts export competitiveness, it also reduces domestic demand. If the global market cannot absorb China's increased trade surplus, the country could face economic challenges from both lower domestic consumption and potential retaliatory measures from trading partners. In the manufacturing sector, new data released this week paints a picture of slowing activity. On Thursday, the China General Manufacturing Purchasing Managers Index, PMI, showed that manufacturing activity in China grew at a slower pace in December. The index came in at 50.5, down from 51.5 in November, signaling a slowdown in the sector. This decline was largely due to falling exports, reduced overall demand, and persistent contraction in employment. The official PMI data released by the National Bureau of Statistics also showed a slight dip in manufacturing growth, with the index dropping to 50.1 in December from 50.3 in November. This reflects a slowing growth rate in manufacturing output, a decline in new orders, and weaker external demand. The ongoing concerns about economic recovery, especially with growing trade tensions between China and the US, have dampened business optimism. The weak performance in manufacturing reflects broader economic challenges facing China, including tepid domestic demand and the complex external environment. As we move into 2025, many experts believe the country will need to adjust its policy responses to these external and internal pressures. Shifting gears to a brighter note in China's economy, BYD, the country's leading electric vehicle (EV) manufacturer, has reported record-breaking sales in 2024, cementing its position as a global EV powerhouse. BYD sold 4.3 million electric and hybrid vehicles worldwide, surpassing its initial target of 3.6 million. Of these, 1.76 million were purely electric vehicles, second only to Tesla, which sold 1.79 million. BYD's success in the global EV market highlights China's dominance in this sector, driven by significant government support and a trade-in scheme that encourages consumers to switch from gasoline-powered cars to electric ones. Other Chinese automakers, like Li Auto, Leapmotor, and Xiaomi, have also surpassed their sales targets, with Xiaomi's first EV, the SU7 sedan, attracting attention for its affordable pricing and personalized options. Despite these successes, smaller players in the EV market face mounting challenges. Companies like Speng and NIO failed to meet their targets, while some startups, like Haifei and Du, collapsed in 2024. The competitive pressure is reshaping the market, leading to consolidation as larger players like BYD and others streamline operations. However, this rapid growth has triggered backlash abroad, particularly in the European Union, which has introduced trade barriers to protect local manufacturers. Trade tensions over China's state-backed EV industry will likely be a key issue in 2025, as the country's dominance in this sector continues to grow. That's it for today's update. We've covered several major developments, from the mysterious viral outbreak in China to shifts in monetary policy, the weakening yuan, and challenges in the manufacturing sector. On a more positive note, China's dominance in the electric vehicle market is becoming increasingly clear, but it faces significant external challenges as well. Thank you so much for watching, and if you're finding value in these updates, don't forget to like, share, and subscribe. It really helps the channel grow and ensures that you continue receiving in-depth analysis on China's developments. If you'd like to support the channel further, consider checking out the Patreon or Buy Me a Coffee links in the description below. I'll be back with more updates soon, either tomorrow or next week. Until then, take care, have a great weekend, and thanks again for your continued support.